Hi everybody, Bob Icino from the Stock Think Tank and from PureXposure Ghost Series and from Pat Trading Partners and from my home office still. I got this crappy Band-Aid on. So look at this Band-Aid. From all the cuts of money I've been making in the stock market. Sorry. Just try to act like those guys you see in those ads. You ever watch YouTube and those guys come up screaming at you? I'm the number 7.5 option trader in the world. What ranking? Who's making that ranking? Anyway, I'm looking at the market today, and I've got, basically we're closed right now, and everything's down. I'm looking at Lululemon's chart right now, up about 18 basis points. And looking at the overall markets where you've got everything basically down with the Russell having led. Let's see what the Russell do. The Russell was down about, looks like about 0.75% on the day. Got the S&P down about 1/3%. NASDAQ down about the same as the Russell, a little bit less. And the S&P down like 50 basis points. I'm sorry, the Dow down about 50 basis points. But certainly not any loss of momentum rally that might scare people. But yet, if you're a member of our Stock Think Tank product, I just realized this shirt really matches the way I started the video. I've got blood on my hands from all the money I've been. So looking at the markets from just a sort of historical perspective, we've seen this before, and I'm not referencing 2008. I'm doing the cliche thing, and I'm referencing the tech bubble of 1998, 99, 2000. Why do I stretch it across all those months? Because I was around during that time. And during that particular time, people were making a lot of money and I wasn't, because I wasn't participating in it. I would watch guys that I knew I was smarter than make double their money in a day, triple their money in a day. And I'm seeing that same thing again. People making triple their money, double their money, and people that, quite frankly, we are smarter than. You, me, Mike Arnold, all of us. It's not a knock on those people. It's not a knock on what they're doing, because they're making money legally, and God knows I'm all for that. But what I'm saying is, when I say we've seen this before, you got to take a couple of things from that. Number one, I hate this bull market. Yet, if you're a member of our Stock Think Tank product, you know that we're buying stocks, right? I hate this market, yet when I do TV, I'll do TD Ameritrade Network one more time this week. I did Bloomberg this week. I did Cheddar this week. I said you need to be long stocks. Because what the difference between this particular bull market and the one in 2000 that I didn't participate in is I'm participating in this one, but in a small way, not being stupid, and protecting ourselves along the way. We still don't have a full portfolio. Currently, we're slightly underperforming the S&P by basis points, but yet we've been underinvested the entire time, which means to me that we'll outperform when we're fully invested when things get right. There is one major difference, and I'm going to show you a chart on this video. There is one major difference between now and 2008, and that's personal income. Personal income is rising. So people have money to spend because the government gave them money directly. But essentially, the government has handed out or printed 4 years worth of tax receipts, 4 years of tax revenue. They've printed it and given it out. Based off of that, there's really no reason for anyone to pay taxes if that was a right way of doing things. You don't have to pay taxes anymore. You just print it. And we know that that's not the case. So there's a lot of things about this rally that I hate, but we're going to continue to do what we're doing, which is buy stocks in a very smart, very controlled way and keep pace with the S&P 500. Beat it on some months, underperform it on others, which is exactly what we've done. We beat the S&P all through the month of June. Now we're slightly underperforming, and we're going to continue to do what we do and invest responsibly and be protected when and if this comes to roost. I'll show you another chart on this video right here, where it took about 18 months for the 2000 bubble to burst. We can call it the 99 bubble, the 2000, the 98, whatever you want. But personal income rising, so that means people will spend it. That means its earning could be better than expected. And that whole tech bubble thing, if it's happening again, which I think it is, it might take 18 months. and we're going to continue to make money while it does. Cheers, guys. Thanks for watching. I'll be back with you soon. Sorry I haven't made a video in a while, but hopefully I'll be making more. Cheers, guys.